Hello, Maverick Traders. This is Rob Reinhold. Joining me is Mr. Darren Fisher, and September is over. I cannot believe that we are already into October of 2022. But let's get into the market because, boy, we had a lot of news this last week, and I'll try to run through this fairly quickly because I want to get to a lot of things in this week. We had another down week. This is the third week in a row that we had a down move. We are now down about 9% for the month of September. If you remember, we brought out a big warning in August, says, hey, everybody, the 6-week period starting September 1st tends to be the weakest 6 weeks of all time in the markets. And we cautioned everyone, hey, we are entering a seasonally weak period. Be cautious. This is where we see the biggest drops through all the years. Sure enough, we're getting absolutely hammered. We are 4 weeks through this period. And so if you're just looking at seasonality, it says that we have about 2 more bad weeks before we get through this negative seasonality period. Look, I don't want to call a bottom on October 15th because that's ridiculous, but we do have to start to think that we are exiting this seasonally weak period and we might go back to a more neutral market after this. But we plunged through June's lows and we are now in a little bit of free fall. We saw the interest rates top 4%. We saw the 2-year at 4.2%. The 10-year briefly got over 4%. And interest rates are really the story that's driving everything lower. And add on to that, there were some real earnings disappointments. We got earnings from Nike. They came out and warned. And they basically said, we have too much inventory on hand and we need to scale back and do promotions. We then heard from CarMax selling used cars. They said used car sales are down substantially and their stock tumbled about 25%. And then we heard from Micron, which is a semiconductor company, one of the biggest in the world, and they said that they are cutting back 50% on their capital expenditures over the next year, which means all of the suppliers downstream from them, their stocks tumbled. So we're getting lots and lots of bad news, and it's just piling on what was already a weak tape. And then if we go over to what we heard from last week from the economic side, you can see we have core durable goods orders, and durable goods orders, those were a miss. We heard from lots of Fed speak this week. We heard from Mester, Bullard, we heard from Powell. They all said, watch out, there's more interest rates coming. We are going to be fighting inflation aggressively. Then on Friday, we got the core PCE price index. This is the Fed's favorite inflation number, and it was hot as well. So we heard from the Fed before this. So they said, hey, we're going to be hawkish. We're going to go further than the market thinks. And then we get a inflation number that the Fed says this is the most important one. That's hotter than expected. So everything is very, very negative at this point and very, very bearish. And so if we come over here and we take a look at how the market reacted to it, it did not react well. So we have the Dow and the S&P and the Qs all down about 3%. So that's a 3% drop in a week. We're now down, again, close to 10% just in September. Oil and gold had a little bit of an up move, but who really cares? Let's jump into the charts. And we've been talking about these June lows. And these June lows had held for a little bit. June lows at about 364 on the S&P, and you can see that on Tuesday, we trickled down below it, recovered. We got below it a little bit on Wednesday, and then we rallied. Thursday, red candle, but we recovered. And then on Friday in the morning, we're looking just great. We were going to hold this level. By the end of the day, we had completely broken through support and closed on our lows. There's no question that this is just a major break in the markets. And I don't see how anyone who is intellectually honest can take a look at this chart and say, the bounce is coming. Now look, of course a bounce is coming. Who knows when, who knows where, but anyone who follows technical analysis knows that this chart is just looking ugly. Now let's jump over here to the NASDAQ, and you can see the same story. We have broken down below June's lows, and we're now in free fall. Darren, I'm painting a pretty ugly picture. Are you going to be able to make this thing look or sound any better?
No, I can make it uglier though. You painted I think the correct picture. And I was looking at the charts today, specifically for the trading room, and I'm looking. It's like, where is the next viable support? Where is it? Where can we find it? And I had to zoom out on that chart. So far, it was back to February of 2020 is the next support, and it's probably 6% away. It's not that far away. So you have to take a look at in 9 months, almost 10 months, we have erased 2.5 years of gains. And I think there's more to come. I'm not going to call the bottom as being those February 2020 highs that we had, but I think that's the only place where we have the next support.
Yeah, and this is the first bear market that a lot of newer traders have seen. And I know that my first bear market I saw starting in 2000. It was much bigger than I thought. And I remember thinking the market tumbled. And after a couple months, I thought, oh, that's definitely the bottom. And then it wasn't. And then it kept tumbling. I'm like, okay, that's definitely the bottom. That one lasted about 18 months in 2000, in 2001. And so this is the first bear market that a lot of new traders have seen. And just understand that it always goes a little bit further and a little bit longer than you think it could. So I'm with you, Darren. I think the next level of support in this market is sadly the February 2020 lows, which is right around 3,400 on the S&P. Now, if you take a look, that's 185 points away. That's about 6%. That's about 5 or 6%. We could easily get that in a week or two. There's no question that we could get that in a week or two. Let's talk about the VIX, because if you listen to my end of day video I did on Thursday, I went through the VIX and I pointed out that there were several times in the past where we had reached up into this 32, 34 area. Here's one on May 1st. Here's another one on about May 10th. Here's another one about May 20th. And here's another one on, let's call it June 10th. If we go back to our charts here, here's the Qs. The Qs rallied here from 310 up to 330. That's a 20-point gain. That's about a 7% rally that we had there. We got another signal about May 10th, about another 7% rally. We got one down here about another, this is about a 13% rally. So all of these signals that we got on the VIX above 34, we got these rallies that were massive. Look at what we got here. We got a spike on the VIX above 34. We got it this week. No rally, which is just, it's so telling me that this market is going lower because obviously the VIX is not into what we call capitulation territory. Capitulation territory where people say, that's it, I can't take it anymore. There's so much pain, I'm out of it. You see massive liquidations, forced liquidations. So I'm looking at this VIX and I'm thinking we don't bottom out in the market until this VIX breaks out above this 34 that has been the level. The VIX signal was the bottom. I think we go up probably closer to 40 here. What do you think about that call on the VIX, Darren?
Yeah, I mean, I think 34 is just a beginning floor to find some sort of a bottom. But I think you're right. I think to actually call a good tradable bottom, we're up, towards 40. I think at least, 34 is the narrowest range, the narrowest part where we could get it. But I think you're right. I think people have to lose more hope, and before we're going to get a tradable bottom here. So I would fully expect 36, 40 definitely in the realm of possibility.
Well, Darren, you did not make that sound any better. So let's kind of wrap up what we're seeing here. We've got the markets, we broke June lows. That was the last kind of line in the sand for anyone who was hoping that the market wasn't going to drop. It's gone. Next target is at February 2020 level, right around that 3,400 on the S&P, about 5 or 6% more. Now, I do want to start talking about, okay, what happens next? So if we have this big break, we have this fall. The question is, do we have a nice bounce off of after that? And this is where Darren and I disagreed a little bit. We're both very, very bearish, but we're just kind of debating the degree of velocity. My outlook is that we have a rout next week. We have a panic, we have a huge sell-off, and we have this spike in the VIX up to 40, and then we finally have that capitulation bounce. where we get a 5, 6, 7, 8% bounce off of that bottom. Darren, why don't you outline what your call is?
My call is that we definitely go lower, but it's a slow bleed, and probably going to last at least 2 weeks, probably even more. But we get down there, and then we base. I think you and I were talking. The faster the move goes, the more likely a rally is off of that. If it hits my scenario and it goes slow, I think there's a very good possibility that we break even below those February 2020 levels, and at best we get a base or a small rally. So I think that's where you and I both are disagree. But by all means, we are both bearish. Don't think that either one of us is bullish on this. We're just trying to decide how bearish we want to be.
And look, if you want the market to go up, you actually want my scenario, as Darren said. It would be better for the market to take a huge plunge and then have everything be quote unquote discounted and then people run in and buy the bottom. That's actually a better outcome for this market. If what Darren thinks happens, this slow bleed, that's a really, really grim outlook. So we'll have to see what happens. We'll have to see, where the market finally does bottom out. But I'm looking at this the way I started September. September, I said, hey, for the next 6 weeks, I'm going to be very bearish. So I'm going to start winding down a lot of my bearish bets and trades really over the next week or two. Now, look, I'm not going to go bullish. I'm just going to go to neutral. I'm going to wind down my bearishness to go to neutral, and then I will reevaluate things then. We have big news this week. We've got the ISM number on Monday. The real big news is going to be the payrolls number on Friday. Now, I remember I was actually traveling, but I was listening to Fed Chairman Powell's speech he gave after the FOMC statement. And I could not believe it, how clear he was, where he basically said, we are moving to restrictive policy until we see job openings go down and unemployment go up. I have never heard a Fed governor be that explicit that they were trying to engineer a small recession. That just blew me away. When I heard that, I thought, I was already bearish, but I need to get more bearish. This is really, really ugly. And so if we do get some sort of relief on Friday, and again, this is where it's going to be a little bit counterintuitive. If the jobs number misses on Friday, that's good news for this market. If the job number comes in way above expectations, that's bad news for this market. I know that's not how it usually goes. If the market feels that the employment situation is changing and the Fed might back off, you might actually see a little bit of buying there. What do you think about that, Darren? About the good news being bad news and bad news being good news?
I can't say I agree with it in this thing. I think there are too many shoes that are left to be dropped that this non-farm, that this Friday payrolls number is going to make much of a difference. I mean, when you've got Powell saying that, you've got to believe him. And they're going to be looking at not just one employment report. They're going to need to see at least three, is where I am at. So when a politician tells you he's going to screw you over, believe him. I think is the best thing you need.
Well, look, it's no surprise that we are as bearish can be. -3 on the monthly outlook. We're trading below our 20 moving average, below the 50. The slope of them are both moving lower. Just take a look at where we were back in May and June. We are in the same situation where we just had these moving averages going lower, and it isn't until they turned that we bottomed out. There's no reason at all to be bullish here. All the reasons technically are saying to be bearish. We've got a -2 on the week. I think, again, my outlook is that we get a -3 early in the week, and then maybe a bounce back to where we end the week down a little bit or down 1 or 2%. If Darren's correct, we just get a slide all 5 days and we're down another 3 or 4% by the end of the week. Ultimately, both positions are bearish here. So let's start to take a look at some sectors specifically.
Yeah, you can see here, let's looking at the performance for the sectors. I have not seen this in the longest time. Matter of fact, I can't remember the last time I saw utilities down 8%. I mean, for an entire sector to be down that much as sedate as utilities moves, I mean, this is pretty impressive. And what I think caused that was the fact that interest rates got up over 4%, and that really made the attractiveness of the dividends and utilities much less attractive, and people were just saying, I got to get out of these things. I'm actually, not only am I losing money on the principal, I'm losing money um, on the dividend as well. Let me get into some of these higher yielding bonds. That's what I think this was. That was finally the crack. And utilities, I think we had utilities as a -1. They definitely don't look as good. Energy, has been the strongest sector pretty much all year. It was up. Materials held in there quite nicely as well. Everything else just down, between 2% and 4% right there. It's just kind of a malaise throughout the entire market. Even though we were down, the markets were down 3% entirely. Let's take a look at utilities right now. You can see exactly what I mean. There was no relief. We had utilities in a -1 last week. The first time we've been negative in utilities, as far going back as far as my records on my sheet show right now. There was no relief. Absolutely. It was just selling, 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 selling. And they're pretty close to the June lows right now. The reason I'm not at a -3 right there is because this is the first real move they've had. And that's one of the criteria I had to use. When everything looks bad, you try to look for additional criteria of, okay, what's strong and what's weak. And one of the things I had to use is, were you above, at, or below your June lows, is for how bearish I wanted to be on any of these charts. Look at comp services. Last week we're at a -3, and this week we're at a -3 as well. No real relief. It's down. This has been one of the poorest performing sectors right there. Just a really good low base that went really, it was doing, the whole week was down quite a bit. Looking at real estate, this is another one, interest rate sensitive. It was at a -3 last week, and this is still -3, below the June lows right there, significantly below the June lows. This looked good earlier in the year, but now with interest rates rising, nobody wants a piece of real estate at all, and I can completely understand that. So this is one that is definitely set up for some further move downward. Looking at industrials, they're at a -2. They're a little bit below the June lows right there, but they're essentially at the June lows except for Friday's candle. So I'm at a -2 on industrials. You can see significant weakness right there. Looking at healthcare, this is another one. I'm at a -2 right there. We're just slightly above those lows, so it's not as bearish as a lot of things go. So significant move down this week, but it looks better than a lot of other things. Financials, pretty much the same case. At the June lows right now, -2 right there. If it breaks below, I'm happy to go to a -3 on a lot of these things. But one thing we have to look at is, when every sector looks horrible, that's the time that we get the bounce. Now, we're not there yet. Everything looks pretty bad, but we don't have everything at a -3. Once everything gets to a -3, that's the time when you want to be able to make as much money as you can on the downside, but be able to cover those shorts on a very, very quick basis, and we'll get a bounce. We're not quite there yet. Consumer, I'm at a -1 on consumer last week. I'm at a -2 right now. It is above those June lows, looking better than a lot of other things, but still a lot of damage been done. I think there's more pain to see there as well. Technology, it's a -3 last week. This one's still a -3. We're below those June lows. This is one of the ones that is leading the market downward. Especially the NASDAQ right there is very tech heavy. So you can see we closed at the lows on Friday as well. So it was just nothing, except for Wednesday. It was nothing but selling in technology all week. Materials, like I said, they were one of the, they were second best performing right there. And I'm at a -2 right there. And the reason I'm at a -2, even though they're below the June lows, you can see we're getting a series of rising highs and rising lows. So I think materials has already, this chart's telling me materials bottomed on Tuesday, looks like. It bottomed on Monday, and we're trying to slowly claw back. And you can see it. Materials was only down 0.6% for the week. And that's pretty good. Looking at energy finally, a couple weeks ago, we finally had to go -1 from positive, and we've been positive energy pretty much the entire year. This one, I'm going to -1. We've seen the same thing that you saw in materials, series of rising lows. Now, this looks like a very mini ascending triangle right there, but I think it looks like it's bottom. It looks like it's trying to claw everything back, and you can see that 20-period moving average just pierced the 50. Probably on Wednesday, actually Thursday is when it looks like it finally pierced right there. So we could be in a situation where energy keeps trying to claw its way back up, and we could get into a nice sideways range right here. I would actually not be surprised if we were stuck in a range for the next 4 or 5 months between 70 and 85 in the energy sector right there. And if you look at the cross right there, about the 77.50 mark, that's right in the middle. That might be just the place to put on a 2-month butterfly, and just in XLE itself, and target the butterfly and go from there. So that's you get an extra trade for free here. So to rack and stack everything here, everything looks awful. No way to put it. Materials, tech, real estate, comm services, all -3s. Looking slightly less like a dog's breakfast. Utilities, consumer, finance, healthcare, and industrial. And the best thing, looking at a whopping -1, is the best thing that we've got, energy. And that's still the place that I think you want to take a look at. So let's take a look at a few different trades here. Now, last week we had a play in real estate. That was CEG. We were supposed to go long CEG, and you can see even with the damage that was done this week, even with the markets down 3%, CEG was only down 0.75% for the whole week. So this, I think, is still a viable trade. If you're in this trade, you lost a little bit of time. If you haven't gotten this trade, I think this one is still viable right here. If you want to wait till CEG gets over 85, I think that's still good. But yeah, I think this is still a decent trade to take a look at. When the market's going down to this basis, it's taking a pretty good look. Now this week we're taking a look at BEKE. That's KE Holdings. Nice long-term ascending triangle right there. You can see we topped out there at about 1850 a couple of months ago, and it's just been all the way up. A series of rising lows. We're at 1752 right now. You can get into this if you want to be a little aggressive. Get into this right now. If you want to wait till it breaks 1850, that you could look at that too. What we're taking a look at is long October 16s and short those October 7th 19s. Nice diagonal call spread. This has got a little bit of velocity to it. Looks like momentum's to the upside. So in a week, you could see that 19, and then just reevaluate what you want to do with it. So in comm services last week, we were short Spotify. And thankfully, Spotify did what it was supposed to do. It went down. It was down about 3.4%. So, just a little bit worse than what the market was doing. And this one we're looking at this week is Snapchat, SNAP, long-term low base break. I mean, it had based at 10 for the longest time. I'll bet the 9, between 10 and 950 right there. All right, so this just broke below $10. And what I like about that is we can get in there and you can go out to October and do the 9-10 bear call spread. This is going to be delta dependent, just slightly theta positive. But in the next 3 weeks, I think this could move 10% and put you down at that 9 level. And I think it looks great. I think this is a good 3-week trade to put out there. And this one definitely has the legs to move that, to make that move. Now in healthcare, last week we were long Amlx. I think it's Amlx is the actual name of the company. And it was up 1% for the week. So this is looking pretty good. And you can see, with the way the market looked, it based the entire week as the market went down. And so this is still looking pretty good. I think the trade's viable still. Probably just gives you another entry point if you're not in it already. This week, we're looking at Agilon Health, AGL. So this is a bull pullback within a sideways trend. Friday's candle was looking not as good as what it could have, but we're in this nice trend between about the $20 level and the 27 level, right in the middle of it right now. So it's the best way to play this. So what I think we want to look at is long those November 2250s and short those October 25s. Just get a nice diagonal call spread right there. You don't want to be that that aggressive right there. Then I think you just do a 2250 25 bull put spread. That one's definitely going to be theta positive for you. You're just going to be paid to paid to hang out basically. As long as it closes above 2250 in October, then you get paid. Either way, I think the trade is definitely worth doing.
And Darren, I really like this trade because look how much it's above its June low. I mean, it substantially has done much better than the markets. All right, let's jump into industrials. Last week, we had a short on Star Bulk Carrier. Now, these carriers have been very weak. They really had a nice run at the first of the year with all of the oil and the things that were being shipped around. But since then, you can see it's nothing but pain. Last week, SBLK tumbled 8.3%, so really nice trade. You look, it had a little up move on Friday after a big down move. Look, if you are very directional here, no problem taking some profits here. If you've got more time, I don't see any reason why this doesn't stay weak along with the rest of the market. This week, let's talk about UPS. Now, UPS, we actually talked about UPS as a long about a month ago, and it was a terrible trade. It was a terrible trade. It bounced here and then just fell apart and then had an earnings warning and it fell down. Now, look, this is where we always caution our traders to not have a watch list. Don't have a watch list because what it does, it locks you into certain stocks. I have people say, but Rob, I know Tesla. I only trade Tesla and Microsoft. And you know what? That is like such an old style way of trading. We now have scanners and screeners that will literally go find out whatever you want. Start every trade with a blank slate. This is what I'm looking for. And then it just delivers you ticker symbols. So here it is. UPS pops up on my short list again. And look at this beautiful bear rally. Just a beautiful bear rally. One of the weakest stocks in the market has a couple day bear rally and turns right back over. So it's telling me, hey, you know what? This thing cannot bounce to save its life. Go ahead and look for a bearish trade. I'm really liking something very short term here, like the October 7th, 160, 165. I was actually looking at this a little bit earlier before the close when the stock was around 162, 163. At 161.54, maybe you need to go out and go to the October 14th, 155, 165, just to give it a little bit more time and to get a little bit more credit on that. But this one definitely is one of the weakest stocks in the entire market. Let's move into the financials. Last week, we had a short on KKR. We really liked that it broke down below these June and July lows. We broke down, we rallied back up, hit our head exactly where we were supposed to, and then tumbled, and we closed on our lows on Friday. I don't see any reason why this stock doesn't go down more. We've already got 2% in the bag, so I think this thing is likely headed down into the lower 40s, maybe 41 or even 40 on its low. This week, looking at another short in financials, this is Upstart Holdings. Now, I don't want to get too deep into the woods here because we are technical traders here at Maverick, so everything's on technicals. But I kind of want to talk about the non-bank lenders, and that's what Upstart Holdings is. So a lot of companies have come to market where they give loans, but they're not banks. They're just private financial companies. I have a friend who works with the FDIC, and we talked a couple of years ago, and I said, Mike, this is where all the risk is. This is where all the risk is. The banks are fine, but these companies, there's no rules that make them hold any sort of collateral. So as you can see, this thing's been nothing but weak. And here we broke down below the low. We spent a little bit of time basing. To me, this thing wants to break substantially lower. And these are the kind of stocks, I'm not going to say go to zero, but these are the kind of stocks that in recessions get into the single digits very, very quickly. Now look, I'm not being that dramatic. I'm a shorter term trader. So what am I looking for? I'm looking for 18 bucks. 18 bucks on this one. So I'm looking at the October 21st, 1821 bear call spread. You haven't seen us talk yet once about long calls and long puts. And here's why. Right now, volatility is very high. And you're having to pay up a lot more for long calls and long puts than you were just a couple of months ago. We, in this situation, don't love those because they're so expensive. You have to get even bigger moves to justify the price you're paying. By using vertical spreads, you can eliminate that premium because again, you're buying one option and selling another. So that volatility is basically just evening out on both sides, and you can really just focus on delta and direction. So again, we don't love long puts and long calls here. We don't like it when volatility is very high.
In consumer, last week we were a long Posh. I think it's Poshmark or something like that. And you can see this just came up on a screener, and it looked good. You can see in a really ugly week, this thing was up 8.9%. So up almost 9% in a week. And Friday, you can see it closed very close to its highs for the day. So this is definitely a strong stock. And definitely one. I'm going to wait this one out and see how many gains we can get out of it. This week we're looking at Wayfair, and this is just a low base breakdown. This has been weak for several months. I mean, it's below the the June lows. Broke out of there about a week ago. I mean, and you can see it tried to base Monday, Tuesday, Wednesday, Thursday. Thursday it broke down and then closed in the lows on Friday. So this is definitely looking weak. How do we want to play this? I'm looking out there. Probably going to go that give it a 2-week trade. That 30-35 bear call spread. I think it's got the momentum to take it down that way. Taking a look at that 30-35 bear call spread right there. And it's right at 32.50 right now. So you're going to have about $2.50 in risk, $2.50 in reward. But you can see this one wants to go down. I think 2 weeks is a really good time period to let it drift down to 30. So technology. Last week we were supposed to go short HCP, and good thing that it never triggered to go short right there. You can see we had a nice green candles all 5 days right there. Good, and this was up a total of about 16%, 15.96% for the entire week. So this is one of those ones, we talk about this all the time. Put triggers on your trades. If they never trigger, then that's fine. It means that was the wrong trade to make anyway. If they do trigger, you're going to win some, you're going to lose some. That just goes into there. But it's when you trade blindly with no triggers that bad things can happen. So luckily, we never got into this trade. That's good. Right now, we're looking at long and First Solar. This is a nice high base. You can see, despite what the market's been doing, First Solar's been hanging in there. And it's just been, basing between, 130 and 140. And, for the way the market's been reacting the last, 6 weeks, that's really good. So what I would do is I'm going to go out to the November to go long those 130s. And then this next Friday's short the 135s against it. And I can do this for the next, 6 weeks and just roll those up. So this is one that if it wants to continue to base, I'm happy to continue shorting, shorting a call at a reasonable target. If it wants to go up, I'm happy to hold that long call in November as well. So this one's looking really good.
Darren, you mentioned industrials. Darren, you mentioned Darren, you mentioned materials actually had an up week. Yes, they gapped down on Monday. It was still a down week, but we had 4 green candles in the materials sector. Last week, we actually talked about a short in Mosaic. Mosaic was down about 0.5%. Now, look, you can see we had 2 red candles, 3 green candles last week. If you still have this trade on, I think you could give this a little bit more time, but this one is relatively outperforming. If you get to a target, I'd say you take this one very, very quickly if we get any sort of weakness in the first part of next week. This week, we're looking at a trade on Vale. So this is a metals company. And the one thing I kind of wanted to point out, this stock has been very weak all year long. All year long, it's been one of the worst. And you can see here, it finally got down to a point where people said it's no longer even worth selling. This thing is really bottomed out. And so looking at this, when we're looking at always having some bullish trades on, some bearish trades on, like we do at Maverick as basket traders, we need to find some things that are actually looking sideways to fairly bullish here. I'm looking at this thinking, okay, if the market can't push this down once it plunges 10% in a month, it's actually up for the month of September. Now, look, I don't want to be bullish on this. I don't want to be crazy bullish, but I do want to be slightly bullish because you can see here, we're starting to get some turn in some technicals. Moving averages are starting to turn up. They've flattened out. They've crossed. They're starting to move up. We've been putting a lot of pressure on this upper range, and I think we're going to push through this thing eventually. Now, here is the kick. I said eventually. So that opens the door to timing. Eventually. Now, look, I'm looking out of the October 21st. If you want to go out to November, I think that actually makes some sense as well. But I'm looking at just 3 weeks out to where I'm looking at a 12, 14, 16 butterfly. Basically, the call is that in 3 weeks, this stock has made it all the way up to this upper end of its range here at 14. If it does that, that's going to be a really nice trade on a sideways play on volley. In energy last week, we had a long in FRO, Frontline Resources, never triggered. It just never triggered. Every day it was down, never closed above the prior day's high, so there was no trigger on this one. Going back to what I talked about with materials, energy also, it actually had an up week, but we had 4 green candles. So we're finding some underlying strength. Nothing is bullish right now. Not one thing is bullish. So the best that we can hope for that it's sideways to slightly higher. So anything I'm looking at bullish, I'm looking at like a +1, like barely bullish. So if you take a look at this one, this Comstock Resources, and I'm looking at it just a slightly bullish butterfly up to 1750. So 1750 is going to be my middle point. That is just maybe 1% or 2 higher from here. And my legs here are going to be at 15 and 20. So this is going to be my butterfly here. So my break-evens are probably going to be somewhere around 1870 and 1630. Somewhere in here, as long as I can stay in this area, and I'm looking to do this with the Octobers, as long as it stays within this area, it's going to be a decent trade and bring in some profits here on a sideways trade. If you have some trades you want to share with the rest of our Maverick traders, jump on the Maverick Trading website, log into the members area, and let's get all of our traders working together. We love when traders work together to help the whole group make a lot of profits. Let's go ahead and wrap this up. We are clearly below that June support. The market is broke. The market is bearish. There's nothing else to say about it. You could be hopeful if you want, but hopeful doesn't pay the bills. You need to be bearish. You should have already been bearish. All the technicals are telling you to be bearish. The only question is, how much lower does this thing go? I personally think we have one plunge lower. I think the next week is going to be an ugly, ugly week. And I think that the market is going to really tumble. I think we could see those February 2020 highs next week. I don't see any reason why this market can't fall 5 to 6% with just the velocity it has. Darren says, hey, you know what? He thinks it's going down there as well, but he thinks it's going to be more of a slow bleed down. As Darren said earlier, the faster it goes down, the more likely it's going to be to have a significant bounce. If it goes down slowly, it's going to be a really, really ugly grind. Either way, I'm looking at the seasonality pattern. October 15th is technically the 6-week period that I was looking at. I'm looking to be winding down some bearish positions. I'm not going to bullish, but I'm definitely going to take a lot of profits, back off, I'll reevaluate. If I miss a little bit of this move, look, we've already caught like 9 or 10%. It's been a fantastic return in September. If I miss the next 5%, I am totally okay with that. But again, I'm still bearish, but I want to get as much as I can out of this move. But I need to understand that every move has an end. And when it gets to that end, I need to be able to cash in, take my profits, move to a more neutral stance, and then reevaluate the markets. That is it for the trading room. Thanks for joining us. Have a great weekend.
Good trading, everyone.